What's up, guys? So this is clearly not looking entirely fantastic for the SPY. We can see that we broke below this falling wedge and had another day of follow through to the downside. But now we are getting increasingly close to 372 and 370, which are two very, very major levels of support. So basically, you could see how this entire area has a lot of support right below it. And especially 370 is going to be a very, very major psychological level. But moving forward, what can we expect here? We can expect the market should continue falling lower. But the only issue is that Fed Powell speaks tomorrow at 2 o'clock Eastern time. So will they allow it to break back above to get another opportunity to go long? And then after going long, will it just be another a bull trap for, you know, another leg down? Most likely, that's what's going to end up happening, right? But the other issue is that the majority of people are bearish. So when you take that into account, that the majority of people are bearish, expecting completely new lows, once enough people just become blindingly bearish that it makes complete... So look, the issue is that it makes complete sense for everybody to be completely bearish at the moment. It makes justifiable sense from the macro point of view and from a technical analysis point of view as well. But when people, especially hedge funds, bank, the majority of big players and retail alike are both increasingly bearish on the market, you have to wonder, are they going to reward people as aggressively as they should, right? So that's going to be very interesting moving forward, especially in the next few months, because many people, you have to realize that many people are very, very just blindingly bearish at the moment. And they are, personally, I feel like many people are very over leveraged to the short side. And if there is a strong few days to the upside, people will not be expecting it. So just be very careful, because yes, pragmatically, it makes 100% sense to be bearish. But as more and more people, as this side of the trade becomes more and more crowded, that's when things become a bit more risky to be short. So regardless, the macro lens of everything in the next few months should be very, very bearish. All right, the economy, stock market, everything should be taking a hit. But the issue is that it should be taking a hit, and everyone knows that it should be taking. So that's where a lot of interesting little things are going to come into play. But essentially, let's just take things for face value for how they are at the moment. So the SPY, we're breaking down below a falling wedge pattern. We're ever close. We're getting like much closer to a level of support. And once again, this trend line, as we're breaking down lower, is going to be a big level for us to continue higher. So if we end up reclaiming this trend line, this downtrend line, we end up closing above it 2 days, then there's a good chance that we can continue higher. So I would be very, very we're gonna be taking this trend line and everything into account. But one of the main levels of resistance is going to be this downtrend level here. That was support. And once this support broke, it's going to be acting as resistance as we come back up. If we can break back above, we can easily break above. You know, once we can hold above it, then it's going to be great. But one other thing that I want to show is that the SPY is not yet very overextended to the downside in terms of the Bollinger Bands. All right. The NASDAQ, nowhere near it. Nowhere near as close to the SPY in terms of overextension to the downside, which is showing that there's a lot more room to the downside, okay? And now when taking a look at the IWM, we are very overextended to the downside, but the Bollinger Band is falling very sharply. So what we're going to be taking a look at is if, ideally, hopefully, the IWM, the futures end up opening very, very red, and we open up outside of the lower level of the Bollinger Band, we are going to go long once again, and that would be an ideal situation. Hopefully, we open up very, very red, and hopefully we open up extremely red outside of the lower Bollinger Band. That is a very, it works every time for a bounce intraday back to the lower Bollinger Band level. So if the lower Bollinger Band level ends up around like 170.50, and for some reason we open up at 168 on the IWM, everything down here, we're going long for a retest back up to the upper level of the Bollinger Band. So there's that for the indices. When taking a look at the dollar, you can see that there is a little bit of stagnation because we obviously had a big break to the upside, and now we're just in price discovery at this point. We had a bit of a stagnation period, but the biggest thing that's an issue is the 30-year bonds, because the 30-year bonds are breaking down much lower. So this is never, these prices haven't been seen in quite some time. So you can see how we are clearly back all the way back to 2013, 2014 level. And we've broken down below these support levels here from June. And this is not looking good for the stock market, because when there's clear-cut direction and weakness coming out of the 30-year bonds, the stock market usually follows. So yesterday I was, showing how we had a green day on the 30-year bonds, but we needed a break above levels of resistance for us to truly see that strength in the 30-year bonds translate into the stock market. But this weakness out of the 30-year bonds is and should be a bit concerning to the stock market. Maybe we could end up, and also another thing is that we are sharply falling on the 30-year bonds as well. The lower level of the Bollinger Band is sharply falling also. So it would take a lot to become very overextended to the downside of the bonds, which is also very, very bearish. So yeah, just take that into account. The one thing that I do want to show is that Amazon was one of the only largest tech stock that is currently very overextended to the downside. So Amazon, when we are this overextended, generally it is a good opportunity to go long. All right. So the same concept that we have on the major indices, they apply to the largest companies. So Amazon, Apple, Google, Microsoft, companies like that. Same concept of buying when we're outside of the lower level of the Bollinger Band applies to Amazon. So when we are this overextended on one of the large tech players, it's necessary to take into account that we can end up, like Amazon will can potentially signal some sort of an outstretch to the downside, and we can end up bouncing based off of Amazon's strength. So just keep an eye on Amazon tomorrow morning. If Amazon is leading the strength for tech and the large tech stocks, then that could be a sign that we're going to end up bouncing intraday as well, because Amazon is very, very overextended to the downside already. So for them to bring it down again lower tomorrow would be very difficult for them to do on Amazon. So just keep that in mind. All right. Regardless, we're going to have these levels to trade against to the upside. We already had a day of follow through to the downside. So everyone that did become bearish yesterday was rewarded already today. So many people already became profitable off of their shorts. Even if they went short as this trend line broke, they're profitable. So a lot of them could have taken profits, and now they're either waiting for a retest of these levels of support to go long, or they're waiting for a break above prior levels of resistance to go long. So things can be very interesting moving forward. And then, of course, like all of this is really just thrown in the air once Powell speaks at 2 o'clock. But in the morning, prior to his speech, make sure that you're not over trading on high IV, because IV is going to be higher than normal tomorrow morning prior to the speech. And also number two, you have to keep an eye on Amazon for tomorrow. All right. Aside from that, that's really it. Oh, another really important thing is, if you guys remember, a few months ago we would look at the strength of crypto, basically towards the last hour or two, and if the crypto markets were really strong, that was almost like a very high likelihood that the overall stock market would be green as well. So what we see right now is that crypto is clearly outperforming. We have ETH and Bitcoin really outperforming the stock market at the moment, bounced off of their lows and are showing strength. So this could be good for the overall stock market as well heading into tomorrow. So we have the crypto markets bouncing, we have Amazon very overextended to the downside, but that isn't an automatic reason to be bullish, but it could mean that we do get some sort of a bounce, especially heading into the Fed meeting. And then based off what he says, it's going to be very interesting, because during his speech he wasn't really saying anything great. He was very hawkish. So yeah, we're gonna have to see what happens. If you guys enjoyed today's video, make sure you guys like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow. Thank you.